Good morning, everybody. Welcome to today's midweek update, special edition, special election edition. Yes, Trump has won and the markets have responded. So we're going to take a look at the major indexes, take a look at the implications, take a look at the Russell, because frankly speaking, the small caps are on fire right now. The Russell is up. I'm glancing over at the screen here, up 4.5%. It's trading like a stock. Here is a look at the major indexes. Take a look at this. This is not a stock. This is the Russell 2000. And when you start to see indexes move in earnest like this, it's very easy for us to start to get very excited, right? Let me know if that's you. Let me know if that's the kind of feeling that you have, right? Because, this has been a very, yeah, for myself too, right? This has been pretty emotional, well, with this election, with a lot that's been said in social media, well, a lot that's frankly going on around the country. You may have seen me talk about some stuff recently, stuff like, well, that's been going on in New York, Proposition 1. Now, unfortunately, that piece of garbage passed, but it's been a emotionally charged time. And when you see markets, right? So you take all those emotions that we've had, and you see you're whether you're a Trump guy and you see him win, and you see the markets taking off, and you get real excited about that, or if you're a Kamala guy and you see her lose, and you're feeling down and out about that, and you see the markets moving, and you're starting to have stronger emotions. The thing that I want to point out, and the thing that I want to tell everybody, is that emotional decision making is never good, whether it's on positive emotions or negative emotions. When it comes to trading, it's not going to lead to great decisions. So let's take a look at where we're at and see. Well, if you let's just say for a minute, there's a bunch of people on here. Are you long? Do you feel that if you are long the market, if you do have positions on, do you feel that you're long enough? Do you feel that you have enough positions on right now? Go into the chat, type in, let me know, because right now you have all the indexes breaking out. Right, these are each of the major indexes. We have the S&P 500 up here. We have the Russell. We've got the Russell over here. Sorry, we've got the Nasdaq over here. This is the New York Stock Exchange. Here's the Dow, and here is the IBD 50, which is generally a pretty good proxy for the types of stocks that I like to trade. If you're feeling underinvested, let me know. If you're feeling invested just enough, just right, where do you fall? Where do you fall? Because if you are feeling a little bit underinvested, like, oh man, like, yeah, I've got some stuff on, but I wish that I had put on some more. If that's the feeling that you have, the eagerness, the urge is to go and put something else on. Right. The urge is to go into the watch list, start to hunt for something, and be like, all right, let's take something, let's get active. I don't want to miss the boat. You might see prices move higher again tomorrow, and even again into Friday, right? All this stuff is possibilities. All this stuff is the kind of stuff that's swimming around in our minds. Well, what's better is to be patient, because if we do, let's let's flip through some of the stocks that are on the watch list. So I'm sharing with you now is my focus list. This is the focus list that was sent out last night to members of our research program, members in our group coaching. I play with an open hand, and I share all the stocks that I'm interested in. So here's a few of them. Uh, ALSN, this was setting it up in a short stroke breakaway gap this morning. Here's another one, right? And we'll just flip through some of these names. A lot of them right now are extended. A lot of them gapped up. Some of them had very strong moves. A handful of them, like this one here, right, fell, and you see how it reversed and is now at the high of the day. Here's one that would have triggered an entry and sat back down. So here's the thing. You don't want to get too excited about any one trade. You want to wait for the high quality trades to show up. You want to show up for them to be there and to have ways to assess, is this a high quality trade? Yes or no? And how much money do I want to be putting into this? Because if we see something like, I don't know, you guys name a stock. Name a stock that you want me to pull up. I'll pull up. Here's one, right? Palantir. Well, this is one that we've talked about a number of times. It had gapped up on earnings following through today. And if you're somebody that's sitting out there and you're like, man, oh man, I wish that I had a piece of that. You know what? It's at $50 right now, $53. I'll just buy in right here and enjoy the ride up, right? Because look at all that heavy duty buying. Well, guess what? Guess what can happen? You may end up being the guy that buys it right here, and you still have all this room, right? All this room. So from prices, where prices right now, if it wanted to pull back to the 5-day exponential moving average, you're looking at a 10% drop, right? Are you willing to sit through a 10% drop? For me, I'm not. So what I'm waiting for at this point would be pullbacks. Alberto wants to talk about Tesla. Let's talk about Tesla because I think that Tesla is a great name. This is the Trump win play. This is the Elon win play. We've seen how much this guy has been all in, and you probably have heard him speak on Tucker Carlson. Perhaps you've heard him speak on Joe Rogan's podcast. He's come out and he's basically said, yeah, I'm all in. And so if Trump doesn't win, I'm basically getting locked up. And what do you think that would mean for Tesla? Right? So here's Tesla, a nice gap up move, and it's above this dotted line here. Now, I didn't draw these dotted lines just out of nowhere. This dotted line, the thinner one, is resistance from July. This thicker one goes all the way back here to September 23. So if price is gapping above that, treat this whole thing, right? This whole thing. And now let's clean this up just a little bit. Don't need that over here. Let's take the annotations off, and you're just looking at this whole thing. You see that it's starting to break out. And you see that it's starting to break out on pretty hefty volume. So does it look good here? Yes, it does. It sure does. So my thoughts on this. It's breaking out, and it's starting to break out into, or starting to begin, I should say, a stage 2 uptrend. What's a stage 2 uptrend? A stage 2 uptrend is when price starts to move in an uptrend, but it's not just any old uptrend. It's where you start to have the 50-day moving average curved up. It's where you start to have the 200-day moving average curved up. You have both of those things happening over here. Here's the 50-day moving average, that red line. This gray line, which was flat for this whole thing, is now starting to curve up, and price is also confirming that action. Stage 2 uptrend, Tesla, I like it. What else do you have? Alberto wants to talk about, he's naming a bunch of them, FSLT. Let's take a look at FSLT. Got a bunch of people over here. If you're here, let me know what stocks you're interested in, and we'll take a look at all these. That one's not popping up. Let's put in run. Ooh, man, yeah. some of the solar stocks not doing so good. Not doing so good. Like that. This isn't one that I would look to buy. Or well, when stocks are beat up like this, they're not ones that I really look at all. You were looking at First Solar, right? So I'm not really looking to buy anything that's beat up like this, that's living below the 200-day moving average, that gray line. The reason why is because history proves that when stocks are in stage two, that you have a much greater chance of them continuing to trend. I'm a trend follower. I like to swing trade within larger uptrends. That means that if prices starts to move up, I'll take some gains, then I'll wait for pullbacks, buy it again, and then sell, right? And so I'm playing not small ball, but where I'm locking in at say 15 to 20% gains, and I'm trying to turn my portfolio over fairly quick. Yeah, well, the solar group is not a group that I would want to be in right now. As far as shorting, right? I uh, from the way that I like to short when everything is in my favor. So solar not doing good. Okay, that's one thing. How about the general market? Well, if the general market looks like this, right? These are all monthly charts. This doesn't look like the best time to be shorting. And the reason why, even if I find an entire group like solar where everything is in the tank, you're still fighting an uphill battle versus the market. And not only that, you're probably it's probably going to be an easier time for you to find stocks that are moving up versus having to short something and then okay, you're right on that, but because you're in a bull market, maybe uh, people decide to step in and create a short squeeze. You don't want to be caught in that. There's Yeah, I think that the much better upside is frankly to the upside. Here's something else that I wanted to share with you guys. And I was looking at it over in Deep View. So here's a look at Deep View. This is another tool that I like to use for many years. I was using a tool called MarketSmith. I've recently switched over to Deep View because well it gives you more and it charges a lot less. I think I'm paying about that they charge anyway about a third of the price. And well, this is one of the things that you get. So what are we looking at here? This is my universe list. So it's not the entire market. It's just the stocks that pass my screens. I like to screen for growth stocks, and these are the growth stocks that pass my fundamental screens. It's broken down by sector and by industry group, and it's telling us well where how much each of these stocks is up or down for the week. So right away, what do we see? Well, there's some parts of healthcare over here that aren't doing so hot, right? There's plenty of blue, but if I'm taking a just glancing at this, your eyes get drawn to the ones that aren't doing so well, right? The pinks. So there's some areas in biotech that aren't doing so hot. There's some areas in healthcare equipment that's not doing so hot. So all right, so the healthcare move is off, right? We're starting to maybe teeter out. Only the best of the best are surviving. This over here, materials, not doing so great. And then you have some little bits and pieces over here that some are okay, some aren't okay, but for the most part, the entire market is up. And part of the difference, let's switch this over. We'll see if it goes well to market cap. Yeah, not really. Not really what I was hoping to do with market cap. There's so many very large names on this list that well, when you switch it over to market cap, this is what it looks like. And the your small caps are super tiny, but basically what I'm seeing outside of this list is if you're looking at small caps, that's really uh, the place to be. And yeah, Alberto saying that um, he's long TNA, UPRO, and T cell. So yeah, I think that all of those are fine names, right? Here's TNA, and so for a while, we've been in this sideways market, and I think that we'll continue to see pullbacks, right? Well, when you see the market jump up like this, pretty often you start to see the market pull back and fill, right? So I wouldn't be surprised to see the market close this gap and then, or at least close it to maybe back down here and then rally again. One of the things that I like to do for cash flow is when we're in established uptrends and we're basically betting to the upside, I like to sell weekly puts. Yeah, hear me out on this. So I like to sell weekly puts. Why would I like to sell weekly puts? Because what I'm doing is saying that, all right, let's say that, and I actually did this on TNA. I mentioned this one in the group coaching just the other day. So what I did with TNA, right? I mentioned this in the Discord group, was that I sold the $40 puts that expire at the end of the week. I did that yesterday, right? Fairly early in the morning when price was around here. Sold the puts down here. Now, why would I do that? The reason why is because if we take a look at the overall price action here, right? And there's more reasons, but just looking at the price action, we're seeing a series of lower or higher lows being made. So if price were to suddenly drop all the way down to 40, one, it would be violating that, but number two, it would be coming down to the 200-day moving average. It's a spot where it would likely catch a bounce, and not just based on the price action, because we're talking about TNA. This is a proxy of the Russell. Taking a look at other elements that are happening in the general market. There's the general market, the stocks were not falling apart, right? Like there was some that pulled back pretty heavily, but it wasn't the kind of action that was telling me that, oh, the market's ready to fall over. One of the things that I like to keep track of, and I'll share this with you too. This is one of the things that I also share with our research program and our group coaching members is this spreadsheet here. And where's the spreadsheet? Just getting it down to today. You may have seen me share this a few different times, but what I like to do is I like to track the action across indexes, across time frames, and track the stats uh, of the market, of distribution, new highs and new lows. I like to track what my system is doing, all this stuff, so I get a real three-dimensional feel of what's happening in the market. In fact, do I still have the? Yes, I do. All right, so this is how I view the market through these three lenses. You have the general market, you have your system, and then you have your personal performance. And it's through these three lenses that you'll get the best view of what you personally should be doing. Because let's say the market is jumping up like it is right now. And let's say that you're starting to see stocks take off. But if your personal performance is kind of so-so, is that telling you that you should be stepping on the gas or not? Well, if it were time for you to be stepping on the gas, then shouldn't you be already performing well? On the flip side, let's say that you're doing extremely well. The general market is leveling off. Maybe you're starting to find some setups. What that tells me is that, yeah, you know what? You've performed well. Your decisions have been good. And it is time to start to step on the gas because the market could be getting ready to make a turn. So when I start to see all those kinds of things happening, I like to be able to sit on profits. I like to be able to see a market that is taking off and to be able to be like, all right, now I could start to plan my next couple of moves and be ready for pullbacks, be ready to take advantage. If I start to see something that's, and at this point over here, right, the Russell was starting to look okay, but it's still high risk, high reward environment. So if I'm busy with TNA and I'm selling puts down here, then guess what? I'm able to uh, make some short-term cash flow. If say price does come in and it does the shares do get put on me, then guess what? I'm also still in a long-term sideways move, and I would then be able to sell calls, right? Sell the out of money calls back when those shares are put on me at the end of the week. I know that might be a little, well, you guys let me know if that's a little complex or if you guys are with me on it. Because, well, we have beginners watching this show. Well, we have some experienced people watching this show. Alberto is actually, well, one of our VIP members. So there's all types. And I want to make sure that we're bringing everybody along. But there are non-directional. Well, it sort of is a directional play, right? Because I'm assessing the trends, but it's not putting on shares. It's giving myself multiple ways to win, and that's what you want to do too. You want to give yourself multiple ways to win, even even in stocks that like I just buy shares. I always like to give myself multiple ways to win. So, for example, here is Reddit. Right, I think we've spoken about Reddit a few times before. I've been in Reddit for a minute now. I got in down here October 4th. I've had a few scale outs on this already. Prices continuing to climb, push its way higher. The way that I make sure that I make money on this is by scaling out bits and pieces into strength. And then when it gets to a certain point where I've locked in the majority of my gains, then I can let the last piece of it continue to run and not have to worry about, I'm up 70, 80% on this. Well, what happens if price suddenly gaps down and wants to test the 50-day moving average and I'm going to lose all this? And then you know that kind of stress where you're worried about giving back gains. You have that kind of stress. I used to have that kind of stress all the time. Having multiple ways to pay yourself takes care of a lot of that. It helps to smooth out the equity curve. It limits the drawdowns, and it's like having your cake and eating it too. So part of what I think we should be doing is starting to look for, if you're underinvested right now, then you want to see some of those trades where you could have non-directional plays like we just talked about in TNA. You want to exercise patience. You don't want to hop on something just because, well, look at this. It's up 3.5%. Yeah, I think I'll just buy it so that way I could be in something. If you're in it, wonderful. Continue to trade it. If you're not, then you need to wait. And the market is an infinite stream of opportunity. We're going to see plenty. I think that this is just getting started. Right? If we just take a look at the indexes again, let's let's reset this chart here. This is the Russell, right? It just broke above resistance going back to December 21. It's not even at all-time highs yet, right? It still has a little bit ways to go. So if this thing is finally getting ready to break into fresh all-time highs and kind of feels that way, there's going to be a lot of opportunities. The way that you are going to capitalize on those opportunities is by picking your spots and picking your spots well. Because if you're expecting the market to just go up in a straight line, man, oh man, are you in for a rude awakening. You need to pick your spots because price can also pull back in sharply, shake people out, and then reverse and start to move its way higher. And it's not going to be a very simple, very smooth thing where it just comes and it kisses the moving average and it starts to move on, or it just comes right down to a support area and then immediately bounces. No, there's things like shakeouts and all these kinds of things, and we need to be prepared for all of it. And the way that you can be prepared for those kind of things is by first making sure that you are taking high quality, high risk, high probability, low risk, high reward trades. So let's see. Well, what other questions do you guys have? We've got a few minutes here, few minutes for any kind of questions that you have. And while we're waiting for questions to come in, why don't we put on put this on here where you could go and sign up for all the different things that we have going on. Well, we've got a lot of things going on. Like we have, well, first off, make sure that you like and subscribe to the channel wherever you're at. That's the first thing. The second thing is going to be head on over to marawealth.com, because over on marawealth.com, we've got lots of very cool things to share with you. Right there, there's a blog, there's the books, there's the newsletter. A lot of this stuff is free. The tools, position size calculator, trade gauntlet, all this stuff is there and free for you to use. Questions, comments? Alberto says that bonds and gold are down big. Well, let's take a look at gold, because there've been a lot of gold bugs, and sometimes, well, what you'll end up hearing quite often from people, especially on social media, is that when something breaks out, right? Like I remember hearing back here, right? A lot of people said talking about getting long gold, and it's going to be so great, yada yada. You don't really hear the same people talking when prices pull back. Gold has been okay. I don't think it's been bad. I think that gold broke out back here. That is back in March. It's had a very good run. Right now, it's up about 30% since March. Pull back to the 10-week line. If you were looking to go long gold, it's not a bad spot to see if price does hold the 10-week line. And then if it doesn't, to exit that kind of a position. I'd want to dig deeper into the chart, but I could see people eyeing that 10-week line as a spot to add or defend. Let's take a look at crypto. Yeah, crypto at all-time highs. least Bitcoin is at all-time highs. Yeah, Bitcoin is looking fantastic. It's a volatile one. Ethereum looks like maybe it's starting to come back. It's got a lot of work to do. I'm not in love with that trend line, but we'll see what happens with Ethereum. Here's Ethereum Classic. Yeah, you can't really say that crypto is at all-time highs. A lot of people will take a look at Bitcoin, and that's the proxy for all of crypto. But you don't really have much else hitting all-time highs, right? Like most of them here are not even close to hitting all-time highs. Most of them are still in downtrends, but Bitcoin is doing well. I wouldn't be surprised if Bitcoin goes sideways for a little bit here while some of the others start to play catch up. If I'm going to own one, I'd want it to be Bitcoin. SOL. What's this? Crypto cap. How does this thing trade? A lot of these tend to be very, very choppy. Let's put this on a 30-minute. It's not bad. Personally, I'd rather just stick with trading Bitcoin. Been a long-term holder of Bitcoin, so it's nice to see it back in all-time highs. But if you're not really planning to unload it anytime soon, it doesn't matter all that much. The spots to add Bitcoin, right? Turn off all these crazy annotations. The spot to add has been on or around that purple line, which is the 21-day exponential moving average, at least recently. My well, what I think is going to happen if we do start to move sideways, you're going to start to see that 50-day moving average, that red line, catch up, and I think that that starts to become the newer support area. So if price does pull back towards the 50, I think that perhaps we start to see uh, that line act as a spot for people to add. But again, we shall see. All right, we are now about 4 minutes over, so we'll wrap things up here. If any of you are in the New York City area, we have the New York City Investors Business Daily meetup happening tonight. Uh, it's been a long time in the making. Here is the details. I've put this out in a couple of different spots. So if you need it, just check my social media and you'll be able to find it. But we are meeting tonight at Mustang Harry's at 6 p.m. Eastern. And it's going to be a good time. I'm looking forward to seeing many of you live and in person. It's going to be fairly informal. Trying to see what direction you guys want to take this group, because we could take it in a variety of directions. But the ones that are there in person, you guys obviously get preference for what we're going to do. how we're going to do it. And I'd like to see what you guys would like to contribute to the group too, because it's really all of us that will drive this thing forward. So looking forward to seeing you guys later tonight. And until then, take care, everybody. Much love and God bless. Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Marrow Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.